North American markets have had a strong run so far this year, with the TSX outperforming both the S&P 500 and the Nasdaq. But following Tesla's disappointing results, investor attention is now squarely on the remaining Mag 7 earnings for next week and the implications for markets. Joining us to break it all down is Chhad Aul, Chief Investment Officer and Head of Multi-Asset Solutions at SLGI Asset Management. And Chhad, thanks very much for joining us.
Great to be here. Thank you.
What are your feelings right now? We're in the middle of earnings season. How do we feel? Are we at the halfway point? Can we say that?
Yeah, I mean, we're probably about a fifth of the way through. I guess the big stories so far have been in the financials in the U.S. You know, the real bellwether, large caps, pretty good results. You know, some mixed guidance. And of course, last week we had, you know, a little bit of wobbles in terms of some news from regional banks adding to concerns around credit and, you know, the lending standards, let's say, at this point of the cycle, which I don't think is too unusual that you start to see some of that this late in the cycle. At the same time, we broadly don't think there's huge systemic risks there. But we're really, like you said, entering the next thing. I think what most market participants are really waiting for next week is, you know, 5 of the Mag 7 and really the most AI sensitive of those major players will be reporting. And of course, the market is very focused not only on what the earnings are. Our expectations is that they're likely to, you know, once again beat earnings in the quarter. But where's their guidance, right? Because there's been a lot of talk around whether there's a bubble in AI, if they're you know, exceptionally frothy. So getting some guidance from those major players will be very important to the market at that point.
Is that the big one that you're paying attention to? What else then might you be looking at when they come out?
Well, I mean, yeah, next week is shaping up to be quite important because you add those 5 out of the Mag 7 reporting on the earnings front, and then we've got, of course, central bank action, and the Fed's in play, the Bank of Canada's in play. So I know we've been chopping around a little bit in the markets in the last couple of weeks. Not unusual to see some consolidation given how far markets have run so far this year. But we could get some news next week that gives a little bit more comfort. And as I expect, I would expect to see markets continue to march higher. And next week's news, that combination of earnings as well as the central banks expecting more cuts, could be what the market needs to get, you know, over this little hump that we've seen over the last couple of weeks.
And so how are you positioning yourself then for the last quarter of the year?
So we actually have taken, you know, the opportunity to incrementally add a little bit to stocks in our portfolio. In some of this, you know, in some of the uncertainty that we've seen in these last couple of weeks, broadly still we like to be broadly diversified globally. You know, at the margins, that we are taking a little bit more of a defensive stance, adding to healthcare, adding to consumer discretionary from a sector perspective. But like I said, I do think markets will continue to push higher as we get over, you know, some of the concerns right now, because again, we're not seeing, to our minds, real kind of systemic stresses, despite some of these concerns around credit. I think you just need to be mindful that the risks are there, mindful that we are quite late in the cycle. But again, the opportunities to move higher from here still present themselves.
Now, we're just talking about some of the challenges for healthcare right now. Any concerns?
Broadly speaking, again, in the healthcare space and you know, from a sector perspective, we're talking more with the U.S. Some of the concerns around pharmaceuticals, et cetera, have began to ease, and so we're seeing a little bit more upside there, as well as, you know, the defensive aspect. So if the economy is really continuing to cool, you do expect to see the healthcare sector, consumer staples as well, see a little bit of a bid from that perspective. So it's a reasonable way to stay invested, but at the same time have a bit more of a defensive stance. If, you know, we're not getting a lot of economic data, certainly in the case of the U.S. with the government shutdown, but if that cooling trend continues, you may see a bit more of a defensive shift, and it's a nice way to stay invested, but still a little bit more defensive.
And where are you fitting gold in all this?
So gold has been, you know, it's been a great addition to the portfolio. We've invested tactically, had an overweight position for more than a year. A lot of that has built through from, you know, it began with various investors of numerous stripes kind of adding to gold positions. First, it was kind of reserve managers and central bankers looking to diversify their reserves. And then more and more investors began to catch on to gold as a way to, diversify that safety asset that has predominantly been the U.S. dollar. I think that still has a very important place in the portfolio, but more diversification in terms of that sort of safety aspect that gold provides. We've seen a bit of a wobble, certainly so far this week.
I got to cut you off there.
At the same time,
Chad, I'm sorry. I got to cut you off there. We're almost out of time. Got to cut you off there. My apologies, but we're almost out of time. Chad, thank you very much for joining us today.
Absolutely. Thanks very much.
Chhad Aul is Chief Investment Officer and Head of Multi-Asset Solutions at SLGI Asset Management.